Okay.
Judgment. Okay. Very good morning, everybody, and welcome to the presentation this morning. My name is Mohamed, and postgraduate student. My subject is accounting and finance. This presentation has a general idea about generally speaking about the accounting and finance, and mainly specifically about the difference between the Libyan petroleum companies' financial system and the IFRS adoption. IFRS adoption means the International Financial Reporting Standards. The presentation divided into three main parts, and the definition is one of the general parts. The definition will be defining the local system of the Libyan companies and the local standards of the accounting in Libya, and the other part is will be the IFRS and what's the IFRS and who does they work for. One of the main differences will be the difference in taxation. This is a big difference. We'll be looking at this part very carefully, and we'll have some real examples from companies. The second part is the auditing and reporting. We will define what's the auditing and what's the meaning of reporting as well. And we will have some sort of a small criteria or for example of the reporting process. Then we will move into general differences, like very general differences between the two parts. Let's first of all define the Libyan accounting standards. This accounting standards was first established in 1953 when the company first became independent. The Financial Bureau and Ministry of Finance created the accounting standards according to some previous standards. They brought some experts, financial experts from, for example, Iraq and from Lebanon, from Egypt, because of the lack of expert in financial accounts at that time. There are many similarities between the Egyptian accounting standards and the Libyan accounting standards. For example, one similarity is the taxation treatment. We have the same sort of taxation and the same sort of the way to how to calculate the tax in these two parts. The Libyan accounting standards, if we compare it to the international financial standards, they have many disadvantages indeed. And even the small researchers can really see these disadvantages. One of the main disadvantages is that they don't recognize external auditing. External auditor, they don't really recognize, because they say the duty of the external auditor and the audit control are the same, so we don't really have to have an external auditor office to keep an eye on the financial statements. Also, there is a difference between the two parts regarding the Islamic regulations. When we first start to make a system, it's the financial system for the companies, or when we start to provide our balance sheets, we'll be looking very carefully at the Islamic regulations, whereas the other part, they don't really have any religious regulations. They just predict regulations according to the issues they have at this time. Well, the other disadvantage is the violating environment accounting to the regulation texts. So at the end of each financial year, we can see that the information provided through the balance sheets doesn't really fit with the requirements by law, or the requirements that the accounting standards say. So this is one main disadvantage, and that lead the accounting standards to be adapted to IFRS. On the other side, we have the International Financial Reporting Standards. This is a foundation working under the supervision of IASB, which is the International Accounting Standards Board. IASB was one of the members of the American Accounting Associations, which was created in 1958. 1935, I think, so very long time ago. And they just became independent in 2001. They are working closely together, and they have just 15 full-time members working under the IFRS, working under the IXP. So we can see there is a relationship between the two foundations. They just, as I said, established in 2001, but this is a 10 years period of time, and they have just created a new 5 reporting standards, which is not really easy for a new foundation to create even one standard. This side has many objectives. One of the objectives is to give assistance to the financial associations that have many problems in closing years and closing the final accounts of each company. So they just keep an eye on the account of financial reporting for big emerging businesses and even small companies that need some assistance or some solutions for the financial issues they have. If you look at the differences, one of the main differences is the taxation. We can, maybe somebody asks me what's the deferred tax. For example, the deferred tax is actually the amount that represents the company liabilities for tax that owed and has to be paid for the next further period, financial period. So this is one of the differences. In Libyan accounting standards, we don't really have a deferred tax, whereas on the other side, they keep mentioning the deferred tax, and they say you have to calculate the deferred tax very carefully and give a brief statements about the deferred tax you have for each year. Very similar to the deferred tax. The way of calculating the deferred tax is, as shown, is the deferred tax liabilities and deferred tax assets. So they look at the differences between these two bars, and the amount we have is the deferred tax for the year. There are many aims for calculating the deferred tax, they say. One of the aims is to identify the accounting treatment for income tax, and also just to be aware of the deferred tax for the previous year. So we can really, like at the end, we can have one just balance sheet for 2 years. For example, we have a balance sheet for 2012, and the deferred tax for the previous year will be shown at the same balance sheet. So it's like a regulating way of accounting and financial statements. Tax authority and the Libyan accounting standards. We just directly deal with the tax authority, and we, at the end of the financial year, we give them the accurate amount they need to pay, that has to be paid at the end of the financial year. So, whereas on the other side, they don't really deal with the tax authority very directly. It's not really easy, they say. This is one of the main differences. Here we have an example for the calculating the deferred tax. Don't panic, I don't want you to look at the all numbers. Just focus on the numbers that highlighted in red. Is it very clear here? We can say that the net profit before tax is the 14 million. This is the balance sheet for the Libya Oil Holdings companies, which own, I think, 23 or 25 companies around Africa. This is the consolidated one according to the International Financial Reporting Standards. We can see that there's been a difference between the two net profit income tax. One of them is the 14 million, and the other side is 12 million. The difference between these two parts is the deferred tax we spoke about. So this is a very huge number and very big difference concerning if we look at the standards very carefully.
1 minute left.
Okay. One of the main differences as well is the audit and support. The definition mention if audit is is it an accounting process for used by businesses and used by an independent body. And the aim of audit is just to give a clear and justified result for the shareholders. And one other aim for the auditing process is just to make sure that the company practicing no deceptions and have some transparency at the end of the financial year. So they presenting the financial statements according to what the auditors have decided and according to the decision of the auditors. Here we have some similarities indeed. The audit and report is not really very huge numbers compared to the different tests. So according to the IFRS, we have a monthly report, which is not really very hard way and compared between the two sides. The monthly report means you have a monthly report in the left-hand side. So you have a balance sheet, monthly balance sheet every month, which is not really possible for the Libyan accounting standards.
It's okay, we've got your slides here.
All right. You have an example of the auditing process, the auditing process, yes.
You need to be coming to your conclusions now.
The conclusion, as a conclusion, we have mentioned the differences between these two parts, and we can say in the conclusion that the Libyan accounting standards has to be adapted to the IFRS as soon as possible. We have many issues indeed dealing with the financial authorities and financial associations. So the sooner we adapt to the financial standards, the better financial treatment we have in the future. I've used some references just to justify this presentation. If you want to have a look at the references, I will be happy. And if you have any questions regarding the presentation.
What does liability mean? You talked about a company's liability, but I don't know what that term means.
Company liabilities. This is a very good question. Thank you for your question. The company's liabilities mean the numbers that the company has to pay at the end of the financial year. For example, we have an asset, like this computer is an asset for the company. And we use this computer for 5 or 10 years period. So we have to calculate the accumulated depreciation of this asset, and then we have to pay if we need to fix the assets, so if we have tax has to be paid, this is called the liabilities, like an accurate numbers.
And can assets include things like company cars and things like that? Or is it
Cars and lands and the buildings and computers, chairs, tables, everything that they use for the. Any other questions?
Okay, thank you for your presentation. But in fact, you mentioned something concerning the accounting standards according to Libyan companies or something like that, and you mentioned something related to Islamic regulations.
Yeah.
When we consider certain accounts for your Libyan companies, do you consider Islamic regulation as a sort of disadvantage or, let's say, impediment for?
It's not really a disadvantage. We don't consider this as a disadvantage.
Or impediment for your accounting standards?
This is a certain rules. So it can't be changed, as you know.
Yeah, of course, I know that. But
so we consider it just as a difference between the two standards. So the Libyan standards follows the Islamic rules, whereas the other side don't really follow any rules. So they just predict the new rules maybe in just one day, and according to any issues they have in financial treatments. So, for example, if any company is called the international